Okay. Well, we had a great set of panelists and discussions, very active this morning. I think there were a lot of great content, and I'm seeing a lot of the panelists being tracked down and talked to. I think they have a lot of great information to bring that can help us understand kind of what's going on. So our next speaker, our keynote for this afternoon, has been heavily involved in the crowdfunding space. He is with UC Berkeley and has done a conference in the fall for the international crowdfunding, and it's a pleasure to welcome him here, Richard Swart. Richard, thank you for being here.
Thank you. So Sydney didn't tell me I was the after lunch speaker, so I have to either aggravate you or entertain you, but somehow keep you awake. So we'll see how good of a job I can do there. So my role in the crowdfunding universe is somewhat I guess I'm the geek of the industry in the sense that my job is to track data, and I don't have any equity interest or ownership interest in any platform, so I can be neutral here. What I'm going to try to do is sort of share some of my observations. This morning was my 36th plane flight of the year. So I'm spending most of my time on airplanes now doing consulting and advisory work and working with governments, and I think I've been to 4 continents and 11 countries so far in 2014. So I have a very international perspective on what's happening. That being said, of course, most of the activity is US. So we're going to go over a lot of facts and perspectives, and I'll try to differentiate between what empirical evidence I have and what opinions that I have. So what I'm going to try to talk about is just what's happening and what's evolving, what are some of the challenges to the industry, and where are some of the opportunities. So tweet me, do whatever you want. Here's my handle. So basically, let me give you an idea. This will give you some perspective on what I spend my days doing. So I'm doing a research, and we completed one looking at the impact of crowdfunding on job creation and economic growth in small companies. We're about to start a study looking at geographical patterns of crowdfunding financial activity, and we had a small pilot project here in California I'll talk about in a moment. We're doing some strategic consulting with universities around crowdfunding, and if any of your alma maters are thinking of doing crowdfunding, tell them to stop right now and hire a consultant, because everybody that I've seen try it is doing an abysmally poor job of it. The universities don't understand crowdfunding, and they need some help. I actually consulted with Cal. It took me 9 months for them to figure out I was there. It's a bureaucracy. And as soon as I had a meeting with them, they stopped their initiatives and they're starting over again. They literally had spent 9 months, 40 staff members, thousands of meetings, and they had no clue what they were doing. So unfortunately, a lot of organizations think they understand crowdfunding and they don't have a clue what crowdfunding really is. I was invited by the British government to help them work on a manifesto on crowdfunding policy and practice, which I'm working on. Doing an estimate of the market size for real estate crowdfunding. I'm not a real estate expert, but I'm starting to do some analysis there. And I've been hired by another government to study the impact of crowdfunding. So a lot of studies, just what is this animal and how does it behave and how does it affect others. So a couple of announcements. Berkeley has just been designated by the Crowdfund Foundation as the Global Research Center for Crowdfunding. They're giving us some money, which is the ultimate goal in academic success is you tell the dean, did you raise any money? So we now have raised money. So the Sloan Foundation, the Milken Institute, and the Crowdfund Foundation have designated Berkeley to be the global center for research and policy and crowdfunding. We're going to start aggregating a lot of research activity. We're hiring fellows, postdoctoral researchers, graduate students, and we're going to become sort of the global headquarters for research and policy in this space, which is an exciting announcement. We finally got some funding and background. So I'll talk about a couple of perspectives on crowdfunding. First of all, the data, and I have a lot of data, shows that it's an extremely successful and viable way of funding low-risk equity investments into micro-enterprises. Again, micro-enterprises. The average company size is 2. These are not companies of 20 or 50 or hundreds of employees. These are typically, they've gone maybe they're out of the garage or they're in the co-working space, but these are typically very small early-stage companies that are successful using crowdfunding internationally. Secondly, we're finding that it's an incredible on-ramp to other forms of financial activity. We have data looking at subsequent bank financing, subsequent angel investing, subsequent venture capital, small business lending, and we're finding phenomenal numbers showing that people that successfully execute crowdfunding are then able to access other traditional mechanisms of financing. So whether it's a proof point, a signal indicator, a screening mechanism, we're not exactly sure why, but let me give you a perspective. We did a study of 600 companies that had raised substantial amounts of money, $50,000, $100,000. 73% of those companies 6 months later were sitting on term sheets or had received institutional investments. 73%. Phenomenal number for anywhere. And that, by the way, is Africa, UK, Europe, and the US. It's not just a Silicon Valley data set. 73% of companies that had successfully raised at least $50,000 of equity crowdfunding were sitting on a term sheet or had closed a financing round within 6 months. So it's an incredibly effective mechanism of demonstrating your team's ability to execute and that there's a market for your product and that you know how to communicate that product to your market. And angel investors are cherry-picking deals. I mean, Oculus closed last week for a $2 billion investment round. And we'll talk about that in a little bit, a lot of anger about that, which is ironic. So it's an incredible on-ramp to financing. Secondly, kudos to Steve Blank. It's basically a perfect match with Lean Startup and his philosophy of showing that you have product validation and market testing and customer engagement. We're also seeing, I don't know if I've got a slide on this, big brands are playing with crowdfunding. Large brands, Coca-Cola, Procter & Gamble, Condé Nast, Dodge, Microsoft, Dell, Intel, they all have crowdfunding initiatives. American Express is also, either has launched or is about to launch a major initiative. Now, obviously, when you have a multi-$100 billion company, why are they going to do a $75,000 or $100,000 crowdfunding campaign? So let's talk about a crappy car, the Dodge Dart, okay? It's the car you give to your kid to send off to college. It's okay if he wrecks it, right? Sorry, Dodge, but let's be honest. That was the original brand positioning. So Dodge, they had the DodgeDartRegistry.com, you can look it up right now, basically said, why should we crowdfund a car for you? What's the mission? How are you going to use this car? Over 7,500 teams created online campaigns to crowdfund Dodge Darts. Quarterly sales the quarter after the crowdfunding campaign were 125% of the previous year's sales of that car. And that brand enhancement has continued since then. They repositioned their brand in the consumer's mind through one crowdfunding campaign. That caught the attention of other brands. So we're also seeing charities are freaking out. It's a possible disintermediation channel where donors can reach the people they're intending to serve. Now, the interesting thing, though, is a lot of companies and philanthropies have said, we're going to use crowdfunding and directly allow people to touch the people they want to fund, and we don't need a layer of intermediation. What they're finding is they don't know how to pull that off. And many of those platforms are now being absorbed back into other traditional charities. There's a lot of discussion about how social financing mechanisms are going to threaten traditional financing models for philanthropic organizations. Can you leverage it, or does it threaten you? We've also found an extremely interesting mechanism where we call it community of interest. So whether it's ethnical, racial, sexual identity, university affiliation, whatever your community is, crowdfunding seems to tap an emotional component of those communities. The most interesting for me Title II crowdfunding platform is Our Crowd, John Medved's play, Berkeley alum, go Berkeley. He has probably, I'm going to say $100 to $125 million in deals will come through this year. He did 26 million last year. He's going to 4x his growth fairly quickly. He's basically organized the American Jewish community to invest in Israeli technology startups. He's now organizing the world's Jewish diaspora community to invest in Israeli tech startups. Brilliant play. That's an archetype of how to be hyper-successful. Find a passionate, engaged community and channel their activity towards a specific form of investment activity. Trying to become the Kickstarter of the industry, the Google of the industry is going to be very hard. So deal sourcing, we've already talked about that. We already are seeing angel networks that operate as crowdfunding platforms in Asia. They are one and the same. There's no difference in their models. And we talked about organizing diaspora. There's some very interesting models happening in Africa where people are using crowdfunding mechanisms to reach diaspora communities. And we did an economic modeling of crowdfunding likelihood. And we found one of the best predictors of the success of crowdfunding in a country is the rate of foreign direct investment and diaspora money flows into that country. There's a strong relationship between outside flows of funds coming back into a country and success of crowdfunding in that country. So international development efforts, strong implications there. Now let's talk government policy. So there's going to be a second wave of equity crowdfunding. We have Australia, New Zealand, France, and the UK have just recently passed crowdfunding equity laws. There's probably 10 or 15 more on the books. Russia, ironically, is about to pass one. But their rule, surprise, surprise, is only the high net worth people can participate. Average citizens can't. Several other countries are looking at it. I'm talking to 4 or 5 Latin American countries right now. Latin America is waking up. I've been to the Middle East twice this year, and there's an extensive interest in the Middle East because equity crowdfund investing is compliant with Sharia law. So it's the first new form of Islamic finance in 600 years. And one of their main problems is they have no mechanisms in their economic models to get money into the hands of SMEs. They need to move billions and trillions of dollars. So they're looking at syndication models where these sovereign wealth funds in the Middle East can utilize crowdfunding to get money in the hands of individuals and women, which is something that's very radical for the Middle East. So I chaired the panel that advised Congress on the Jobs Act, which was a painful process, the academic panel, excuse me. I don't believe there's congressional will to fix the Jobs Act any longer. Even some of the senators that were signatories on the Jobs Act have lost interest. I don't think until we see a change of administration we're going to see anything change. I know as an absolute fact there were 5 bills ready to be introduced if Romney had won the election. He did not win the election, they were not introduced. I don't think until we see a change of the Senate you're going to see any structural changes in the act. There is a lot of recognition on the Hill that it needs to be fixed. It was a hurried up political compromise. The current structure is frankly a disaster in a lot of ways with Title III funding. But I don't think it's going to happen. Until 2016, 2017, we'll see changes. I've seen drafts of the legislation. I mean, it exists. So what we're seeing is the SEC's made a boondoggle of it. So where does the smart money flow? Peer-to-peer lending, peer-to-business lending, real estate crowdfunding, understandable markets. I was in a meeting in New York a few weeks ago with a fund that I advise. They're going to deploy $500 million in 2014 through alternative financial investments. Problem is, Lending Club and Prosper are oversubscribed. They can't take any more institutional money. They're literally turning money away, tens or hundreds of millions of dollars a month. They can't absorb any more capital. So we now have a flow of institutional money from the US to the UK and to Europe because our markets we're oversaturated. The challenge is not enough people are utilizing on the retail side. The awareness of retail investment opportunities is not there. So outside of the US, where we always talk about startups, crowdfunding is seen as SME financing, small to medium enterprises. It's not seen as a startup activity at all. They don't understand why we think about it that way. They also don't see it as a high-risk activity. They sort of look at us like, is there any data to support your argument that it's going to be rife with fraud? We had a couple of slides. They don't get the concern. So they see it as an SME expansion strategy for an alternative to bank financing, especially for women and minority-owned businesses. So let's talk about a little data. Gotta have some data. I'll use the word regression at least once in this discussion. So, who's actually using crowdfunding to fund their businesses in the US? 95% have at least some college education, about half have graduate education. They're mostly males. Half of them are self-employed, half of them are working in their business. In their 30s, it's not 20-year-olds. The average person seeking funding on peer-to-peer platforms is 39 years old. The average person trying to use crowdfunding is 35 years old. This is not a kid's game. Average firm size is 2. The largest firm was 20. Women set lower goals. Alicia Robb's research, I'm reporting her data here, set lower goals, and they're more successful at reaching lower goals than men are at setting higher goals. So it's a paradoxical success. The women typically do set smaller goals, and oftentimes they can reach those goals. Let's just talk about some big numbers for a second. So 15 trillion is the amount of commercial real estate activity. I'm just starting to poke my nose into commercial real estate crowdfunding. 450 billion is the amount that's in REITs right now. One of the structural challenges is that the Securities Act basically locked out retail investors from participating in a fairly stable cash stream from real estate. So I know several of you are working on that, and I applaud your efforts, and I think that once the real estate crowdfunding market gets more mature, we're going to start seeing a lot of portfolio diversification. People are going to like the fact that it's a collateralized asset with a fairly defined revenue stream with some cyclical nature to it, but it's not the high risk profile of startups. So I think you're going to see more and more diversification into that. It's a hot sector right now. 4.56 trillion is the amount of money in 401ks and 457Bs. So if that money starts to be reallocated, and it may be reallocated into some real estate, that'll heat up the sector. 81 billion. I'm sorry I don't speak Chinese. I'm sure I'm going to mispronounce this. Is Yebao. It's an Alibaba microfinance platform. They received 81 billion US dollars in 9 months since launching, until the Chinese government basically freaked out. It's not traditional crowdfunding. It's basically a small-scale investment. They were returning 5.65%, where in China the average is less than 1%. So they were able to threaten the Chinese banking system to almost $100 billion in 9 months. Several competitors are now emerging using the same model. That's an indication of the incredible capacity of the Asian market. Asia, if China can structurally change their laws and their regulations to allow crowdfunding, our economic model says Chinese crowdfunding and equity investing will be equal to the rest of the world combined, the amount of money they have to deploy. So if they enter the market, it'll be a tsunami wave. So, 51 million eyeballs. There's a crowdfunding platform that got 51 million media impressions in the last 6 weeks. Anybody know where they are? Rally Me, check them out. Crowdfunding for athletes. 29 Sochi Olympians used Rally Me's platform to raise money for the Olympics. 5 medalists and 2 gold medalists. So we now can say we have the first crowdfunded gold medals. Okay? They got 51 million eyeballs, 800% revenue growth, and no one will finance these guys. So here's an interesting question. Why are institutional investors afraid of investing in crowdfunding platforms? Don't have an answer to that. But the flow. Say again? Some of the funds with $100 billion aren't going to be threatened by a guy seeking a couple million, but yeah. On the low end, yeah. So if anybody wants to invest in Rally Me, I'll introduce you to the founder. He's a good skiing buddy of mine. That's an interesting example. You can generate massive amounts of media attention and still not get the investments to back you up. There's a certain dearth in our industry where people need to have more investment. I actually used to work for a billionaire when I was working for a venture firm. Apologies to a couple of you in the room that were part of this story, and brought in a lot of people to pitch potential investments. And he actually tendered an offer to buy Rocket Hub at one point. Then he withdrew his offer before they could take it seriously. He should have done it so he would have made a lot of money. And he backed out. So a lot of people that are extremely wealthy are looking at the space and going, too early, not yet. Now, Andreessen Horowitz has some plays. Some of the other guys have put a few dollars in. Indiegogo just raised $40 million. So it's heating up a little bit. But we're seeing, though, is only heating up for the very top market leaders. When the money's chasing success, people aren't making riskier bets. So 86%, 56%. Going back to my universities, I have to do this once in a while. 30-day experiment at a university to see how crowdfunding could work for fundraising. 86% of donors were new to the university. No prior relationship to the university. Not alumni, not graduates, not people they knew. 86% of people brand new. So any alumni officers should take notice. This is a way of increasing your potential donation base. 56% of them were under the age of 35. So it reached younger generations. So people seeking crowdfunding oftentimes are older, but some of the people on the platforms are actually younger.
Was that the goal of the
Well, they actually raised some money. They were shocked by the numbers. They were totally shocked by what they found. Fraud. Okay, I'm an empiricist. Does fraud exist in crowdfunding? In Australia, no. 8 years, not a single case. Western Europe, several years, no, not a single case has been documented. Ethan Mullick at Wharton, great researcher. He did a study. I won't bore you with the details. I can point you to the link. 0.01%, 1/100th of 1% of crowdfunding campaigns had possible indication of fraudulent activity. 1 in 10,000. That's a pretty interesting statistic. No documented fraud has existed yet. Let's talk about Oculus, though. Everybody following the Oculus brouhaha? Okay, so people back these guys. Kickstarter, I believe, I can't remember the number, but it's decent raise. I mean, they were a very successful raise. This got $2 billion, and people thought they had betrayed them. They went out, they built their company, they got funding, they had the Silicon Valley dream, they had an awesome technology, and people were enraged that they somehow went out and got money from the big evil capitalists. So that points to an interesting dynamic. The psychology of crowdfund investing and the psychology of crowdfund donations so far, and everything I'm saying is subject to change because this industry is shifting under our feet as we talk, mirrors philanthropic giving. And people feel invested in the cause, invested in the person, not in the product. And they feel an emotional attachment. And if all of a sudden you become one of the institutional players, you've lost the sort of social-based mission DNA of crowdfunding. That's going to be a structural challenge, especially as people seek subsequent investing. Counterexample of that, though, there's some research done in Germany looking at the decisions and the questions asked by people looking at investments in Europe in crowdfunding. They found the crowd asked equally intelligent or better questions than institutional investors. So the crowd was as good as or better than venture capitalists at doing due diligence and screening potential investments. This is a German study, but I think it'll roll over. So, fraud. If I wanted to defraud you, what would I do? Psychological manipulation, right? There's time pressure. I have inside intelligence. You can't share this with anybody else. You have to get in now. If I disclose the secrets, then somebody else will know about it. It's all about this, appealing to your greed and secrecy. The psychological mechanisms of fraud are basically alleviated by most of the mechanisms of crowdfunding. I'm not naive. We're going to see criminal activity. But most of the arguments made by regulators are absolutely based on a 1930s worldview of telephones, guys smoking lots of cigars and making fraudulent phone calls in private. They don't understand this is actually a public activity. We have, however, counter-argument again, seen a couple of totally fake crowdfunding sites pop up in Africa. Nigerian letter scams turned into crowdfunding sites. No legitimacy, absolute 100% fraudulent. Okay? So the question for the industry is, how do we know if someone's really real? How do you know that XYZ crowdfunding site is a legitimate crowdfunding site? Is it FINRA registration? Is there a seal of approval? Is there a registered list that the government maintains? How are countries going to deal with this potential threat? Russian mob's going to try to do this. Africans are going to try to do this. There's going to be some fraudulent activity. Viability, interesting study. Moloch again. Looked at people that have raised $5,000 in crowdfunding. So the question is crowdfunding a flash in the pan activity or does it actually lead to anything? We expected maybe 10 or 20% of people that had raised money for a project or a business. And this includes both philanthropic giving, social impact. I want to build a slide. I want to do a children's theater group, not necessarily a for-profit activity. He went back and looked 5 years. Over 90% of people that had raised $5,000 were still doing the thing they had set out to do through their crowdfunding campaign. 90% over 5 years. So we talk about an ongoing viable venture, whatever that venture is, whatever the mission of the organization is. So the question from a research perspective is why? We have no idea. Is it the social ties? Is it the cohesion of the community? Is it the validation of the product? We don't know yet. But it's a very interesting statistic. It blew us away that there was so much viability going on here. The Australia example, the vast majority of the firms raising equity crowdfunding in Australia are still viable 5 years out, which is the opposite of all other data about early stage companies. It's close to 70 to 80% failure by 5 years. This is over 70% successful and still ongoing, and still viable. So the early data suggests that crowdfunding is an incredibly effective mechanism to select more viable firms. Not to select the next Facebook, not to make everyone a billionaire, but to have a higher than statistically likely odds of having success. And that may be SME, it may be a pizza parlor that goes to a new operation. It doesn't necessarily mean it's a 500-person operation. It could be from 2 to 6 employees. But that's where all the jobs are created, are small enterprises. So let's talk about some takeaways and then I'll open up some questions. So the alternative financial markets for consumers are very slow growing because most consumers don't know about the opportunity. Perfect example, my wife is brilliant, 4 graduate degrees, okay? Told her we should move some of our money into Prosper. I mean, they're getting like a 9% return net of everything. I mean, our money market's getting like 0.7 or something. It's ridiculous. So let's reallocate some of our portfolio. Absolutely not going to happen. So, wife put her foot down. Not going to move our money into this crazy Prosper thing. I said, why? It's crowdfunding. It can't be real. You know, you can imagine our pillow conversation after that one. So, online consumer finance, such as Prosper, Lending Club, and other models, poorly understood but rapidly threatening banking models. So here's what's happening. Consumer banks, community banks, are telling lenders to go to Prosper and Lending Club. They are then buying those loans back from Prosper and Lending Club and carrying them on their books. It's cheaper and more efficient for them to let these other organizations do the deal screening than to do the processes themselves, and they're actually getting higher returns net of all expenses by letting the other companies do it. That's happening today here in the US. Many mid-sized regional and community banks and credit unions are actively sourcing deals through Prosper and Lending Club. Excuse me. So institutions are figuring it out. Large institutions are trying to deploy large amounts of money through alternative finance. Challenges, Prosper. Prosper 1 was a disaster. Ron had to clean it up. New management, new structure. They were not effective at underwriting their risk. The underwriting methodologies are very poor. With good underwriting and good marketing, these firms are going to dominate industry. Lending Club, IPO, crystal ball, sometime next quarter maybe. We don't know when it's going to IPO. The original estimates were 1.6 to 1.8 billion. What I've been hearing recently is above 4 billion IPO. In the last few months, their potential valuation has doubled. Once that happens, the amount of money flowing in that sector is going to just explode. So, data. I said Silicon Valley is the crowdfunding bank. I'm a professor. I have to ask a question. What am I implying by that statement? Save your money. Now, all you young tech guys and gals who are making ridiculously outsized salaries and annoying all the locals are the people that are putting money into crowdfunding campaigns. And your money is flowing out of Silicon Valley to finance other crowdfunding activity, and the majority of the money is flowing to LA. So Silicon Valley crowdfund donors are backing Los Angeles-based creative projects. There's a very strong north-south flow here in California. Some more data, it's not published yet. Actually, maybe my next slide. Yeah, here we go. Unfortunately, the money does not show that crowdfunding is working well in rural America. Crowdfunding data shows right now that it works very well at taking money from the middle of America and putting it into projects on the coast. Now, there's lots of confounding variables. Is that because that's population density? Is that because it's where the creative projects are? Is that because that's where the technology clusters are? We haven't teased any of that out yet. We're not seeing flows of money from the coasts to the heartland in our initial data. I talked about Silicon Valley, LA. Users are early technology adopters in their 30s with college degrees that live on the coasts. This is early adopter stage. This has not hit the mainstream of US population yet at any stretch of the imagination. And unfortunately, almost no penetration of minority communities. Extremely little. Saddened how little there has been. Either awareness or success. Let's talk about some challenges. So, if I were a bank, I would be a little threatened by this mechanism. I would then say, you're not ready for our money yet. And by the way, there's data that shows that if a bank's first contact with a potential customer is for a loan, and they turn that person down, there's less than a 2% chance that person will ever do business with that bank again in any form or fashion ever. Okay? So banks have to figure out how to change the no's into a not yet, you're not ready, and figure out how to get them involved in other financing activities so crowdfunding becomes the on-ramp to our loans. So some CRA projects need to be built around that, especially in minority communities, CRA monies and obligations. There's a few problems with institutions. First of all, there's not a lot of analysts in our industry because it's so new. Not enough money to really pay a high-priced analyst to track it. Some of the industry reports are pretty good. Some of them are total garbage. I've seen some that are based on totally flawed understandings of economics. Some that are good. But there's a huge quality variation in what's coming out of our industry. Secondly, and I'm going to talk about the UK. I'm not going to pick on the US, but I've been spending a lot of time in the UK these days. Massive misstatements. Platforms are misstating earnings, they're misrepresenting revenues, they're misstating technology. There's a lot of puffery and a lot of problems. So there's a healthy skepticism when potential investors start opening up the kimono and looking underneath to see what's really going on. There's a problem with transparency and openness in the industry itself and how we're presenting our scaling. And everybody's small and wants to be big, but on an industry based on openness and trust, it's a very significant threat. Many platforms are also severely undercapitalized. They're going to crash and burn quickly. Some management teams are pretty lightweight. And I'm seeing a lot of challenges where people think it's a technology play or it's a web services play, and it's really a financial services play. And they don't understand that. And then there's some platform technology that frankly can't scale. I'm not going to pick on any one particular platform, but there's several white label solutions. Some of them are not so bad, and some of them fall apart at scale. And that's part of the challenge that we have, is people can't tell this. So I know 60 to 90 universities that are going to launch crowdfunding in the next 6 to 9 months. It's sort of the new hot thing for development officers to do. The problem that we have there is they don't understand what they're doing. The best model for philanthropies and universities is to align corporate CSR and community impact investing to a crowdfunding campaign with matching dollars and try to engage people around projects as opposed to just, some particular activity at an institution. And then donors and investors do not see too many negatives in there. Oh, they see it as, my slide doesn't make sense. What they don't understand is that they're participating in a community. And that crowdfunding is all about engaging and activating a social network. You both leverage existing social networks to get people onto your platforms, but once they're on your platforms, you're creating communities. So the question is, how does that community continue to add value to its members over time? People that crack that nut grow and scale. People that see it as a transactional-oriented business don't understand the DNA of crowdfunding very well yet. And that was my random walk through crowdfunding. So, any questions?
Yeah, how do you see the emergence of credibility networks factoring into crowdfunding?
Tell me more what you mean by that.
Meaning, in order to scout who people are, maybe even at the personal level or at the company level, find out who they are, what kind of background they have.
Yeah, like early IQs and plays like that. Yeah. I think the layer of service providers to help verify identities of participants and also sort of check out their stories, that industry has to grow. I think it's going to play a key role, especially as things try to grow into scale and becomes more mainstream. People are going to look for some sort of a verification mechanism. Yes.
Hi, Jason Tripp from Pensko Trust. I oversee about 50,000 investment accounts of accredited investors. And do you have any advice on screening crowdfunding portals to see which ones would be reputable, for lack of a better word, to offer to my 50,000 accredited investors?
Yes, that's a long discussion. Fundamentals, just go back to fundamentals of investing. Management team, experience, depth of knowledge. Unfortunately, this isn't going to be a kid's game. The people that are going to execute this well are going to have some really sophisticated understanding. The second question is, how do you get the investors on board? There's 1,000 people chasing money. The question is, how do you aggregate the investors? The people that can aggregate the investors are going to be more likely to succeed. Health iOS Exchange is a perfect example of that, a life science Title II play. Before they launched, they had, I think it's 18 venture capital and private equity firms agreed to source deals through their platform. So they aggregated the investors before they sought the deals. And I think they launched with something like 1,800 deals day one, and they're up to 3,000 right now. And they're having successful exits. So a very verticalized, sector-specific play, but done with pre-existing committed investors before they go out there. So as my question isn't, can he source people seeking money? The question is, John has tapped the Jewish diaspora community. These guys have tapped life science venture capital plays. How are they going to get the investors on board? Because money will always follow if there's actually investment activity happening. Like AngelList and Gust, I'm a little concerned about some of their numbers because a lot of the funding activity is not taking place through that platform. Their funding activity is taking place off platform, but they're still counting it as activity that people are misunderstanding. I don't think they're misrepresenting, but people are assuming that all that financing activity is happening on those platforms, and it's not. Yes? Her question was what do we know about why minorities are not participating well? I don't have any first-hand data, but I'll use some second-hand reporting. And there was a survey done by the Minority Business Resources Council, I believe, out of Washington, D.C., and they aggregate something like 1,100 minority CEOs every year. They did a survey at their last events, and I think there was 850 responses, and I think 5 people had ever participated in a crowdfunding campaign or event as a donor or had any connection to it whatsoever. The second question is, I mean, unfortunately, the financial literacy in the inner cities of America is terrible to begin with, and the educational opportunities are terrible to begin with. So again, I'm not a sociologist, but I think there's some challenges there with just getting information into their hands. And then secondly, unfortunately, we're racist. There's a what's called homophily effects. We typically invest in people that look like us. So if you're Chinese American, you typically invest in a Chinese American. If you're from Yale or Harvard or the East Coast, you'll typically invest in people that share alumni relationships with you. If you're a West Coast person, you typically invest in West Coast people. So there's organized Indian, Pakistani, Chinese investment networks, very active here in Silicon Valley, and they typically invest in themselves. And there's some psychological dynamics around that, but we unfortunately know that people typically invest in themselves. And getting people to accept investments from people that have cultural or ethnic differences to themselves is a long-standing problem, and crowdfunding so far has not fixed that problem. Ready? All right, last question, then I'll turn it over to Sydney again. Yes?
Would you consider crowdfunding campaigns as a way to raise a company's brand equity in the future, or I guess now?
Does crowdfunding work to raise brand equity? Absolutely. I think what's not understood oftentimes is that the money is nice, but sometimes it's the least important component of a crowdfunding campaign. I know companies that crowdfund strictly for public relations, and they find it cheaper than hiring a PR firm, and they're very good because the media is all over it. That may not last for very long, but right now it's so hot. There's companies that crowdfund for research and development, so they need $40,000 for their next product. They raise 80, they take the 40, obviously they're good at it, but they take the extra raise to fund future development. But crowdfunding is an incredible engagement mechanism, and it's a great marketing and PR mechanism. I'll use an example. University of Utah tried to do a crowdfunding campaign for autism intervention. The crowdfunding campaign failed. They didn't reach their goal. Within 2 weeks, they had $110,000 in checks flow in from potential donors that had seen the campaign, so they got more money offline from people they had no relationship with than they had raised through the crowdfunding campaign itself. And the development office thinks they're on track to raise $400,000. So crowdfunding activated and mobilized messaging about what the university was doing, but it had no direct success in terms of the success of the crowdfunding campaign itself. I'm going to turn it over to lots of other people who need to speak. Thanks.
Dr. Swart, I want to thank you on behalf of the audience, and that you give your academically legitimacy to the crowdfunding. I was introduced to crowdfunding through Cambridge, your colleague Brian Zanghang, and that's what I find out. Anything that education, anything at the institution of academic, they put their hands on it, it give validation for us. And we thank you for great work you do. We appreciate you sharing your knowledge with us, and we're grateful for you being in our industry.
Thank you.
But I want to add up another thing, couple of recognition here. And we just heard about this conference that we do, and there's a couple of great conferences that is happening. Early stage, we were the volunteers. I call myself as volunteers and more of the organizer. And because my love of this passion for crowdfunding and crowdsourcing, and it's been and it's just happening. And I support that. We have great conferences here. They started with Ruth Hedges, I highly recommend that in Las Vegas. She's been doing it for a couple of years, it's crowdfunding boot camp, and very hard work. And Andrea, she started with Coastal Show, David Drake, and I have my friend from Montreal, I was just happened to be there, Perry, has a great show. We're gonna have another couple of conferences happening in London with Barry, I was there. And also in Toronto, Canada, there's going to be another one. So it's a lot of these people, but we have to support them, and we thank you. But also, I want to recognize a couple of associations that has been behind the scene and hard work. They have these people. They do kind of a volunteer. It's not profitable for them to get involved. One of them is SIFRA, DJ Paul and Chris Trell and Joy Scheffler. They are involved. And we have the CFPA with the Charlie Sidman and the other people. Actually, they're handling Scott McIntyre, and they're doing a great job. And I want you to just go into the website, go into these conferences, support them, so we can have, as an industry, will be stronger. So when we get to the next level, hopefully we will get that. As you see, Dr. Swart mentioning that how phenomenon this crowdfunding is, so we all be in the same time. Thank you very much for your support. And I'm going to turn on to Rich. Yeah, we're going to have, go ahead, Richard. I want you to, I am so biased to this next panel, which is wonderful. I'm very happy to put this panel together.